What is going on, investors? Are back again by request, often a lot on this channel. People want to follow Virgin Galactic Holdings, ticker symbol SPCE. This is Richard Branson's kind of space exploration kind of company, and we'll talk about it here in general. They've got a $3.9 billion market cap. When we jump into the numbers, you'll see a big fat zero on the revenue line. So this is going to be a little bit different video because we're going to have to dissect a little bit. This is what I call a press release company because they don't really have any revenue. They're just spending money. We'll definitely talk about the cost and how they're raising money, how they're financing these activities, and what that relates to you as a shareholder. But they just reported quote unquote earnings or gave a financial update yesterday. And so we're kind of covering that here. Now, they're blaming a lot of stuff on COVID-19, which I think is an easy thing to do for a lot of executives out here. They say the company has continued to experience ongoing delays to its business and operations due to the virus, which has led to accumulated impacts on both schedule and cost efficiency. So they're blaming a lot here on this. This is expected to continue through the fourth quarter and into 2021. So they're really giving you no timeline, though the company has continued to stay on track, and they weren't necessarily promising anything that huge at the end of this year. Looks like they've got kind of their first space flight between November 19th and the 23rd. So coming up here in a few weeks, that's definitely something that investors will want to keep an eye on. And it also has a revenue generating payloads as part of the NASA flight opportunity programs. My guess is that revenue is not necessarily going to be anything significant, and how reoccurring that could possibly be would be interesting to find out as well. Like, is this something that could be a big part of the business model? Because as we see right now, the business model, in my opinion, is still a little cloudy with this company. Like, is there going to be enough people that are going to want to go up into the edge of space and fly on this aircraft? Right now, they have about 600 people that have signed up, and I think they've halted these. They're waiting until Mr. Richard Branson, or Sir Richard Branson, does his first flight sometime in 2021. I don't think we have an exact date for that yet, but I think it's expected in early 2021. Sir Richard Branson is supposed to go on a flight, and then once he goes on a flight, I'm sure it'll be well publicized, and they'll be able to parlay that into maybe people flying. But right now, they have 600 people signed up for that. I'm just wondering, in today's economy and just in general, how many people will want to do that? I don't think it's going to be a large number. And so how big the business could potentially be on that end, I think is rather narrow. Now, they probably have other revenue generating things like these revenue generating payloads from NASA. There's probably other opportunities here for this company. It could be that we're just, the snow is just falling on the mountain. We haven't even gotten on our skis or our snowsuit or our visors or whatever to ski down the mountain. This is just kind of exploring the possibilities. That is possible, but let me tell you what, you are going to pay a hefty price as a shareholder. Let's take a look at the financials here. We'll jump into some other things. We'll finally jump over to the stock chart as well. And so we'll take a look. 3 months ended here, 9 months ended here. Again, not a lot to see here from the top line because we have zero revenue for the last 3 months here. And you see here, even last year, we had just a small amounts of revenue as well. So gross profits non-existent. So what you want to keep in mind in these situations, if this is the kind of company that you like, if this is the kind of company you're into, this is kind of like gambling, in my opinion. If you like that kind of thing, well, what you want to pay attention to are these costs. Let's take a look. 3 months ended here. We go from last year to this year, and then this looks like quarter over quarter. And so we went from 26 up to 30. What are these in? We've got in thousands. So this is $31 million. This is 26 million. We were at 17.9 in the previous period. Research and development cost, you'd expect these to be pretty hefty, and those have stayed rather consistent. We went from 34 up to 47, consistently going up to 46. So we have an operating loss of $77 million because that is our total cost minus off by no revenue. And we got an operating loss in the previous quarter at 63. So it looks like we're accelerating here with no revenues. Maybe for the next 2 quarters, you'd probably be pretty close to $100 million loss loss on the business. You see in the previous year, we lost about $52 million. That's because we had a gross profit of $426,000. Okay, that's not millions, that's thousands of dollars. So not a lot of money. Net loss, again, they don't got a lot else going on. I doubt they're paying any kind of taxes as well. And so we've got about a $77 million net loss. Now, the thing that you want to keep in mind is take a look at this weighted shares outstanding here, basic and diluted. We went in the previous quarter, we had 211 million. Now we're up to 225 million. That's 14 million more shares. And we had 193 and we're up to 225. That's like 30, call that about 32 million shares. That is massive amounts of dilution. I'll show it to you on the cash flow statements as well. Here's the balance sheet. We'll come back to that. What I want to show you is, so here's our cash flow statement here. Obviously, we have negative cash flows. We pull down this net income. They can add back some things because you have stock-based compensation, some depreciation. You can add back in inventory. So cash flows don't look quite as bad, but it's still pretty bad. We lost $54 million in cash running the business in the quarter. Previous period was $51.39. It looks like they're in between a 40 and we'll call it $55 million run rate on a quarterly basis. So that's pretty hefty cash flows. You see, for the 9 months ended, we lost 162 in cash flows. That compares, relatively negatively to 128 in the previous period. It's not accelerating at a really quick pace. We'll see though, as this company ramps up, it could be that they have to spend even more money. We see where's the money coming from. I think that's a great thing. When we jump into the balance sheet, we'll see there's a little bit of cash there, but the majority of it here, proceeds from issuance of common stock. So this company is the only way they make money right now is issuing common stock. And that's not necessarily a bad thing, but if you're holding this stock, you just want to keep that in mind, that for every share that you have of Virgin Galactic, they are issuing more and more of those shares. Think about it like the United States dollar, 20, 30, we'll take 50 years ago, $100 was worth a lot more than $100 today. And that is because the Federal Reserve and the United States government has just been printing large amounts of dollars and essentially devaluing them. The same thing is happening here with Virgin Galactic. Now, moving up into the balance sheet, we do have $740 million worth of cash. That is solid. It, compares favorably to the previous period. They have about, you could call this maybe 2 or 3 years of cash if they made no money and they just kind of burned through everything and didn't increase their expenses that much. They have a little bit of cash here on the balance sheet. From a liability side, it's really clean. Okay, they don't have a lot of liabilities, mainly because it's a recently, I think this went public via SPAC, and they have been raising plenty of money again through issuing shares. Now, does it pay to be early in these stocks? Because I'll probably have lots of people in the comments that I believe in this company. I'm in it for the long haul. Wait till Richard Branson flies or whatever. And look, it may or may not work out. I am just telling you my style as an investor. I don't like to invest in companies that have no revenue, no profits. The only way they make money is by issuing shares, because let me show you something here, just really quick. This is not a flex. I'm not going to take a lot of time on this. I'm just going to show you. It doesn't pay necessarily to be early in companies. Here's NVIDIA. This is my stock portfolio on E-Trade. In 2018, I bought a couple shares of NVIDIA. Obviously, wish I would have bought a lot more, because guess what? I'm up 250% on those shares. That's a $1,200 gain on a very, very small amount of money. Take a look at Apple. I started buying Apple in 2014. What am I up on Apple? On those shares, I'm up 316%. In total, I'm up 210% in 6 years on Apple. Certainly, I started investing them well after the iPhone came out. Take a look at Nike. Started investing Nike in 2016. I'm up 125% on Nike shares. I certainly bought this well after Michael Jordan finished his reign as the best NBA player. I wasn't early there. And then finally, we get down to Amazon. I started investing in Amazon in 2016, well after the sick run of the stock. I'm up 90% in Amazon. You can keep going down the line. Facebook, 76%, Starbucks, 55%, Google, 46%, Visa, 37%, Walmart. I bought this stock this year. Walmart bought this stock this year, 36%. AMD, I bought this stock on Monday, I think. I'm up 14% in a week on AMD. Guys, you don't necessarily have to be early to these things, so it's okay to buy a share or two, watch it, monitor it. If things improve, it goes up. Look, I just proved to you, you don't have to be early to stock. So now, from a chart perspective, things don't look too bad here. Honestly, I have this red trend line. It's been holding this trend line. Underneath this trend line, I'll take it out here, is our 50-day moving average, and this stock has hugged it. So if from a technical perspective, the 50-day moving average is at 1730, and we're at 1872. Anywhere in this range, if you think this 50-day moving average is going to hold, look, it hasn't been a bad spot to buy the stock. Now, from a negative perspective, we made big highs here. We'll just come in here high, lower high. Looks like to me another lower high. That's a bearish signal. So the stock is kind of painting two different pictures. It is compressing here in a wedge. The stock wants to go one way or another. It wants to pop up here and retest these highs or make new highs, or it want to pop down and kind of retest these lows, probably back down in the $7 to $10 range on the share price. So not one that I would be jumping into if you want to take a speculative part. Let's say you have $1,000 in your Robinhood account or something like that. A share or two of this one, in my opinion, not going to be a big deal. If you're overweight space, let's say you have $1,000 portfolio and you have 10 shares of space, which would make it 17, 18, 19% of your portfolio, you're just gambling. You might as well just go to Vegas. I get offers from Las Vegas all the time right now, $20 room, $50 free play, things like that. I think I'd rather do that than play in this type of stock, okay? Because I just showed you, you can invest in the mega cap companies and not necessarily be early in them and make lots and lots of money and be, in my opinion, in a company that is in a better position. Now, will space be in a better position one day? That is absolutely possible. Will it be investable one day? May I potentially buy shares one day? Sure. It might even be a lot higher than this, but my level of safety when they start generating revenues, when the business model becomes clearer, in my opinion, I'd rather buy in there at a higher price than gamble here at a low price and have this business model completely flop, or they just continue to kick the can down the road. They have an easy excuse, easy thing to blame right here. And so if they can, the longer this hangs around, the longer these executives can kind of blame this, and the more cash and shareholder equity they can burn through. So there's a little bit of I'm trying not to eviscerate Virgin Galactic. If you hold shares, I'm not trying to eviscerate you or try to, really put you down for buying stocks. It's just personally not my style to buy companies like this, really super speculative, kind of overhyped companies. This is a company with no revenue, no profits, no really profits or revenue on the horizon. They've got a little revenue on the horizon, but no profits anywhere coming soon. The executives will openly tell you this, and they've got a $4 billion. This is with a B, $4 billion valuation. Now, at a lower valuation, maybe it's worth a flyer. At these prices, I think you're pricing in a lot of good things to happen, and we still got a great excuse that the executives are using right here, that a lot of executives are using, and I don't see that going away anytime soon. So that's space for you. Hopefully you guys enjoyed this one. A little bit different. Tried to play it down the middle, but again, these are hype stocks, and I tend to try to avoid them. Maybe leave me a comment below, convince me otherwise, or maybe you agree. We'll be back again soon with our weekend recap video today on the FANG stocks and Tesla and Microsoft as well. Stay tuned for that. Good luck with your investments.